There we go. I think we got volume now. Hey there, everybody. Chris Franks with Texas West Capital. It is Friday, November 18th, 2022. And, man, good to have you all here coming at you live from just north of Houston, Texas. It is my birthday, I found out this morning. It's funny, you get to a certain age and you pretty much just kind of forget about it, unless you're female, and then, it's your birthday week, your birthday month, whatever it is, right? But anyway, so this is my first time back here since last week, Tuesday. For those of you that don't know, I came down with COVID pretty bad. It hit me hard. I think I slept for like the first 3.5 days, almost nonstop. Feeling better now. Definitely not feeling good yet, but definitely, feeling better. I'm going to try my best not to get any kind of coughing fits here. I've got a ton of cough suppressants. So we're going to see if this works. They don't always work, as you can see. But they are keeping the coughing down a bit. So I'm going to do my best not to do that. Man, so, it's weird. I went and did, had that COVID thing going on, and all this stuff with SBF, Sam Bankman-Fried there, kind of came out, and we found out that basically FTX was what it appears to be was his own personal wallet. I think one of the things I've seen most recently is that he loaned himself something like $3 billion. This from the guy with the fake altruism, right? The guy who said, "Oh, this is my little Toyota here. Why don't you get?" They asked him, "Why don't you get an expensive car or whatever?" He's like, "Well, I don't need to have one." And there he is living in a 30-somewhat million dollar place there in the Bahamas and everything. And man, so just really a crazy kind of time, guys. I often talk here about risk. As far as I'm concerned, most people when they come into trading, they erroneously believe that trading is all about maximizing your profits. And what it really is about doing is reducing your risk, right? So as traders, you shouldn't see yourselves as these profit maximizers. Rather, you should see yourself as these drawdown minimizers, right? Because the fact is you're not going to become a trader and trade consistently and never lose money. So, if you went out there and let's say you got 10 trades in a row and they were all great and you made money, it just takes the next trade without proper risk management to wipe it all out. And this happens time and time again, guys. It may have happened to you. You may have known somebody it happened to. But this happens all the time, guys. And so, these are the things you guys want to be careful about, right? So not only is it the trade you're in, that isn't the only risk. I've talked to this about so many times before, right? So the crypto market in general is much more risky than, say, stocks or, other futures or precious metals kind of markets, right? And even though they've had a bit more, those other markets have maybe a bit more volatility than what they normally do, in general, safer than crypto, right? So as far as risk goes, just being in the crypto market itself is taking on extra risk. Within crypto, what pairs are you trading, right? The more illiquid the pair, the lower down on the list, of 1 to 57,000 or how many there are, the lower that market cap, the more risky it is, right? And as you've found out, it's also the exchange you're trading on. We've talked about this before, and you go, okay, well, Chris, FTX was the 4th largest exchange, and we should have been able to trust it. Well, man, I've got to say, guys, you should not blindly be trusting anything. You shouldn't be keeping more on the exchange than what you're actually trading, right? And that way, if something like this does happen, your risk of loss is just what you have on the exchange. It's not what you're actually holding. So again, as traders, you have to recognize risk. You can't assume that 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 something's going to be safe, right? Even if your money's on Binance right now, guys, I wouldn't even, they're the largest dog out there. I wouldn't just blindly assume that it's going to be okay on there. Again, if anything, this whole FTX thing should have you watching, right? And you're like, oh no, CZ's got my back. Guys, listen, at the end of the day, it's just a guy doing a thing, man. He's just doing his business, and he cares more about himself than he does about you, okay? Just like you care more about yourself than the next guy over, right? It's just the way we are. So the only person that's going to protect you is you. So just make sure you guys do that, right? Don't just leave money just sitting around where it can easily be confiscated, taken, loaned against, outright given out. Not that it's necessarily legal to do so. Again, we talk about SPF and this whole FTX thing, and everybody's like, oh, we need more regulation. We need more regulation. Well, I mean, I'm not so sure that it's going to do much of anything. He broke laws. There are laws already there. He broke. You can't take your people's money and give it away. If you're in his position, that's against the law. You don't need extra regulation to tell you can't do that. It's already out there. So, again, people get scared and then they go to the government and say, oh, we need more regulation. But honestly, guys, I don't know that necessarily is going to change anything. You're like, oh, yeah, well, regulation needs to say that he needs to have proof of funds, blah, blah, blah. Well, he did. He had a major gap auditor auditing his stuff, but backdoor to the software supposedly, right? So he could come in the back door and take stuff out without it alerting the auditors and change numbers and everything else. So, I mean, how does it really help, right? Not just proof of reserves, but, what kind of liabilities are these companies taking on? With the current landscape, again, as you guys are finding out, your money sitting with them is not your money. You're basically an IOU to you, right? I mean, and that's kind of the way it is with banks. But, again, if you're an FDIC insured bank, in case you guys didn't know here in the U.S., read your banking, all that paperwork that you fill out when you first open a bank account, read it. Your funds, once they go in there, are not your funds anymore. They belong to the bank. The bank gives you an IOU. FDIC insured means the government is going to backstop them up to $250,000 for an individual, and then whatever it is, $500,000 for a married couple, right? But that's it. Because your funds aren't really your funds once they go there. You're giving them to the bank. The bank is giving you an IOU. So in that respect, exchanges really aren't any different, except they just don't have FDIC insurance, right? You're putting them on there, you become a creditor. And you go to the bottom of the list. And so I think it's really important that if you're going to be in the crypto market, that you guys understand this, right? Who do we have here already? And by the way, let me know if you guys can't hear me very well. I'll do my best to speak toward the microphone here, but I know I'm not as loud as I usually am because of, this whole thing in my throat right now. Nevlusian, good to see you, man. Thank you. I appreciate it. Mark is here as well. Fibaswani checking in. Let me see here. Arrow Quinn, what's up, man? Yeah, I appreciate it. Hank, thank you, sir. How's the Rona treating me? Well, it's been a real pain in the rear end, I'll tell you what. ARM Data, good to see you guys. I appreciate the happy birthday. Thank you. Let me see here. Fibaswani says, what helped him become a good chartist and trader is mitigating risk and avoiding cost for his clients, not profit. That becomes secondary. Yeah, and man, guys, you may sit here and kind of just save it off, just kind of, oh yeah, whatever. But think about that, guys. It is what it is, right? I mean, trading really becomes a game of the person who wins is the person who loses the least, right? And so, again, risk management becomes everybody comes in, they want that holy grail. They think the holy grail is some system that's going to get them immense profits. The holy grail of trading, the secret sauce of trading is risk management, is proper risk management. Because you are going to lose money at some point. Period. End of sentence. There is no way about it. You can be the best trader in the world. But how you define your Risk management is going to determine how much of an issue that loss is. And so even when you take trades with proper risk management, you're still going to lose money. And when you lose money, you have to make up that money before you can make any profit, right? So you're getting behind that 8 ball. So yeah. Counterparty risk is a thing. It definitely is. What's up, Bamboo? Telluride, good to see you guys. Fibbo Swanee likes to point out that regulation did not stop Madoff. Exactly. Regulation isn't going to regulation laws and whatever. I know there's a lot of people out who believe in that stuff, but I'm telling you guys, man, for somebody that's intent on doing a thing, they're going to do it in spite of the laws. It's against the law here in the U.S. to murder somebody. Guess what? People murdered every day. It's against the law to steal money from people. Guess what? People stealing money every day. But, people in general, they don't want to be their own banks, right? So the big thing with crypto, just a couple years back was this whole pushing you had to be your own bank, right? Nobody wants to be their own bank. People don't want to be their own security. That's why they passed and allowed the passage of the Patriot Act back, 20 years ago when we had the planes running into the towers, right? I'm going to tell you what, right now, I rallied against it back then, and I'll still talk about it today because all it's done is allowed government to assert more power than was intended. And we're not necessarily any safer, guys. We went into a 20-year war over in the Middle East where nothing was won. A lot of lives were lost. So, and this isn't a political statement, guys. This is just the idea that people don't want to be their own security. They don't want to be their own bank. So they're going to sign off on things that appear to make them feel better. Whether it does or not is wholly the other side of the point, right? So I bring that up because, again, crypto is still so new and still so, there's a lot less specific crypto regulation, right? But your regular laws still apply, guys. They still apply. And SBF and his goons there kind of really, in my belief, broke a lot of those laws, right? So I don't know, man. When we talk about trying to get more regulation in there, I'm not. It's going to come, guys. It's definitely coming. I don't think it's going to make things any safer for us, though. Honestly. But it is what government does, right? Government finds a reason to impose itself into people's lives, and then it does that as much as possible. This is the nature of power. This is the nature of government throughout history. It doesn't matter where you are in the world. It doesn't matter how you feel about governments. This is what happens. Now, whether you believe that it's necessarily a bad thing that they do or that they don't, that's an opinion. Okay, you can do that. But, all you have to do is look historically, and there's no argument with what I've just said there. This is what happens, right? So, if you're in crypto, I think you need to take a lot of that responsibility on yourself, because really there's nobody out there who's going to do anything that's really going to help you but you. Nobody's really going to do anything that's really going to protect you but you. And really it's the same way in life, guys. So yeah. Hey there, Andrew Bennett. Good to see you, man. I appreciate you. It's your 4-year-old's birthday today too? That's awesome, man. That's awesome. Let's see who else here. Diego, what's up, my man? I hope you're doing well, buddy. Spiral Architect, good to see you there as well. Buy stock in Halls and Cough Suppressing Company. Man, I'll tell you what. Yeah, I've been eating this stuff like candy. It's stupid. Silvio, good to see you, man. Telluride says, I think FTX ultimately was so damaging, successful because crypto holders were seduced by having high APRs available finally, bored with secure 0% self-custody. Yeah. If anything marks the $69,000 top, right? It was the excessive greed, right? But that's generally how things happen, right? And everybody's like, oh, well, what's going on now is different. It's different this time. We're definitely going down to $1,000 or $300 or $77 or whatever. But I don't think it necessarily is. This is the way that tops and bottoms work, right? And I mean, we had Mount Gox prior to the 2015 swing low, right? That brought us down to that, that came along with that bear market, right? I mean, and they're like, oh, but this is so many magnitudes bigger. But, everybody's got an opinion. And everybody thinks their opinion makes a lot of sense. But at the end of the day, it's the same general psychology playing out again and again, right? So we'll take a look here at the Bitcoin chart in a minute. What I find most interesting at the moment is that we had like a 10, 12% drop, if that, on the FTX news. So if it's supposed to be so significant, why didn't we have a much bigger drop, right? And then we had this news about Genesis, right? The lending arm there of Gemini and all them, right? Talking about that it needs a emergency $1 billion loan by Monday, right? And what happened to what happened to Bitcoin prices? Didn't do anything. It's kind of pushing up, right? It's consolidating, really. Well, like I said, we'll look at that here in a minute. But where's the big drop? So I think there's a good argument for the possibility that just about everybody that was going to sell anyway has sold by now. And this is the way that markets bottom, right? You watch for markets and you watch for an extended trend to the downside, and then you look for bad news, really, really bad news, right? And you look and see, are you getting a reaction off that? Because most of the time, if you aren't, it's a good indication that you're at or forming a bottom, right? Remember, bottoms and tops are processes. The absolute highest price, the absolute lowest price is just an event. As a trader, listen to me now, as a trader, if you spend more time looking at exiting in that process, in that topping process, and entering in that bottoming process, you're going to be a hell of a lot more successful than trying to capture that highest or lowest price. It's almost guaranteed to fail every time you're trying to catch the highest and lowest price. Let me see here. Frank, good to see you checking in, man. And Mark would love to buy 77 Bitcoin. Now, here's the thing. Most people say they'd love to buy $77 Bitcoin, right? And we think we would right now. But most people, we know that most people, if it ever got to that price, would not buy. For the same reason they say, oh man, I'd love to buy it at 30,000 when it was at 69, right? Or I'd love to buy it at 20,000. Or I'd love to buy it at 15,000. But they're not buying. Because when it comes down to it, all of a sudden they become fearful. They become scared, right? This is real. This happens. I would love to buy at $77 as well. I mean, I thought my initial entries there around $1,080, $1,100 were great back in 2017. Man, 77 would be incredible. But the question is, if it hits 77 from 69,000, do you guys think you could really honestly pull the trigger? And then wait and see if we ever get there, see if you do. And that's not meant to signal anybody out or anything, but that's just the psychology of what happens in there, right? It's a scary thing to try and buy it, because even at $77, it's still money lost potentially, right? You're kind of like, oh man, it's come down from $69,000 to $77, man. It ain't ever going up again, right? So yeah. Do I think there's any reason why Bitcoin is going to be dead now or something? No, I don't think so. I think Bitcoin's still got a future. Again, at least for now, this just seems like par for the course when you get into a bear market, right? It sucks. It's awful, especially if you've lost money, to these idiots running Voyager or Celsius or FTX or something like that. But, it really, at the end of the day, until something shows otherwise, it's really just part of that whole bear market scenario, right? By the way, speaking of Genesis, I don't think there's really, everybody's concerned now about Grayscale dumping everything. First of all, they wouldn't dump everything, right? They would take as much pressure off them as needed. They would get rid of what they needed to get rid of, right? But I think more importantly, they make what, $200-300 million, something like that a year off fees, management fees. I think they've got other options available to them, financing based on that potentially, where they could get that $1 billion loan that they need. So yeah, I think we got to be more careful when those things happen and people start really shouting about that we don't get all caught up in that we just kind of step back and take a deep breath and really kind of think about it. I'm not saying it can't happen, but I think the odds of it happening are much smaller than happening, right? So yeah. Wish Brady would send a plane full of linebackers to extradite SBF. Excuse me. Yeah, I think, call me crazy, but I think SBF's real concern should be walking around in public. Honestly, without protection. I think there's some crazy people in this world, guys. I definitely do not condone, violence and doing things like that. But, there are people out there might have lost a lot and are willing to go over and take retribution, that's a very real thing. So, I don't know. SBF stopped tweeting a couple of days back, so that's good at least. Yeah, that stupid tweet fest thing going on. Glad to see that's over with. That was just, I don't know, just kind of keeping he said nothing. He really said nothing in all that. So, maybe somebody got a hold of him and said, stop tweeting, you idiot, before you do say something. So we'll see, right? Anyway, Christopher, what's going on, man? He says, can you please explain GBTC and how it's trading at the equivalent of 10,000 Bitcoin? BTCC and BITO futures products are doing much better. Kathy Wood's buying GBTC and ARK. Well, you're paying the discount, right? You're not buying Bitcoin in GBTC, right? You're buying stock in a company that owns Bitcoin, right? So you're not buying the Bitcoin itself. You're buying the stock of the company. Basically, right? You're buying shares of that company. And that's why it's trading at such a discount. Because again, you're not buying, the Bitcoin itself. You don't own that Bitcoin. You own, part of that trust. That's all you own. And the trust has fees and other things like that in there. Again, we were talking about the $200, $300 million a year that Grayscale makes for managing these trusts, right? So yeah. So that's why it is, because you're not buying Bitcoin. You're buying the trust. Yes, the trust holds Bitcoin, but you're buying the value of the trust, and the value of the trust is not necessarily the value of the underlying product that it holds. None of this crap going down is related to Bitcoin. Yeah, exactly, too. Yeah, it's just, guys, SBF and these other idiots over there, bad actors. Same thing you see anywhere else. TradFi, all that kind of stuff. It's just the same stuff, same idiots, different playground, right? So yeah, again, you see big banks go down all the time. I don't know about all the time, but often enough. You saw Bernie Madoff, and so these things happen regardless. It isn't like specific to crypto, even though people will try to get everybody to believe that, right? Brian Raleigh, yeah, no doubt, man. FTX is definitely gonna, the fall of FTX here. Oh, government's definitely stepping in to regulate, not just in the U.S., but everywhere. Oh, yeah, for sure. Anyway, guys, hey, listen, you can join us here at howtotradetowin.com. Love to have you there. We released a pre-Black Friday sale here. This will be the only time you guys can get 50% off, and you can get it off all subscriptions, so tiers 1, 2, or 3, 1 month through annual. And I'm behind a week with with releasing the coaching program, the information on that, obviously with COVID, but I will be having that information out pretty soon here. And so if you happen to jump in on this, and then decide that you want to join the coaching program, we'll apply your payment here to that. So don't think that, oh my God, if I get this, all of a sudden I have to buy the whole coaching thing, separate or whatever. We'll apply that to that, with that. Okay. So, man, jump in there, do that. The discount should already be applied at the checkout when you guys go in there. So, whatever your rate is, when you go in there, you should see that 50% off on that. I may run a different sale from Monday through the end of next week. but it won't be 50% off. This will be, it just comes to that point where you kind of decide, am I going to take, control? Am I out here to make decisions, or am I out here to kind of sit on my thumbs and kind of, twiddle them around a while? And so this discount here, like I said, it's through the end of the day on Sunday there. But it's made for those who are ready to, really make decisions and change things. And so what you get with that, guys, obviously, is 3 live streams a week. You'll learn just about everything you possibly can about over the course of, if you do an annual with Tier 3, over Elliott Wave, Wyckoff, and price action with that. So as well as, of course, all the other stuff we do with that. You can go there to howtotradertowin.com and see everything we kind of offer here. So we'd love to have you there. Got great people. You guys see them talking in here sometimes. Let me see here. Okay, Mark, I'll get to your DM after I'm done here, buddy. Let me see here. Poison, what's going on, man? Do you have a target to long zone if we break 15.4, our low? Me is near about 12,000. Yeah, so... and Big Face's regulations probably 2024. I mean, yeah, they're going to be coming pretty quickly. It seems like Congress been sitting on its hands, right, about the whole regulation thing. This really, I think, zips them up in there to get it in. Some sort of regulation coming in over the next year. Yeah, I think so. Let's see here. So, here's where we're kind of got what's going on with Bitcoin here, right? And so I think, again, we talked about the idea that if we lost this June low, that would suggest that this is 3, this is 4, and this is some sort of ending diagonal wave 5, right? And so that's what I'm looking at. And I'm looking at maybe ABC is 1, 2, ABC is 3, get a triangle for 4 here, and then an ABC down for 5. Now here's the thing. If this is wave 4, then based on the height of that, our target is right down here around 14,000, 14,100, right around the hourly S1 pivot, right? If this is 3 and this is 4 as a triangle here, based on the height of wave 4, again, wave 5 of 5 is going to get us right there around that 14,000, 14,100 target. Hourly S1 pivot. It also happens to find confluence with this descending wedge looking thing here. So, I mean, to me, there's a lot of confluence, and that's also the 50% retracement just beyond that at 14,248 or so. If you take the run all the way up to this point over here off the December 2018 bear market low. Now, why am I taking off here? Because remember, we're looking at a couple different possibilities, right? And so if this, it is still possible that this is 5 waves up off the beginning of Bitcoin, guys, off 2010. And if it is, we are going to head lower, okay? But the other possibility is maybe this is wave 1 of 5, right? So wave 4 was the 2018 bear market low. And then remember this here, 1, 2, 3, 4, 5, ending diagonal here, right? So it's quite possible this becomes wave 1 up off 2018, December 17th or whatever it was of 2018, right? And this is ABC, and then this is ABC, and then this is 5 down, right? So 1, 2, 3, 4, 5 here. There's no way to know for sure, guys. You're going to have people out there right now that are guaranteeing your price has to continue falling down, and not just to 14,000, but much, much lower, right? Hopefully you guys have been following long enough, to know that you can't do that. You can't guarantee. Nobody knows what's going to happen, right? What Elliott Wave allows us to do is it gives us logical options, right? Based on, how we know that price generally moves, right? Now, if most people, who've never really been taught proper Elliott Wave, are going to tell you, oh, it never works and blah, 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 and all that. But we've seen it does, right? Over and over again. Don't listen to people like that, guys. They don't know, okay? what this lets us do is it lets us get an idea of where things may be headed and how, right? So this is what we're looking at now. So what am I looking at here? Well, again, the idea that maybe we got like an A, B. Let me kind of zoom in here a bit. So maybe this is an A and a B and a C and a D. And then it's A, B, C, D, and we'll get E. So a triangle for wave E. And then we'll break down here lower, okay? Now here's the thing. If this is a triangle right here, this should be a thrust out lower here, and I would expect to see when it breaks down a move down here and a nice rapid move back up into here, breaking out above the end of the triangle. Okay? But overall, guys, I think there's a possibility that we just kind of go sideways for a bit here. Now, if we talk about, halvings and whatnot, right? So the halving is in about a year and a half, March, April of 2024, supposedly. So, we don't get to all-time highs when the halving happens. It happens before that, right? But I mean, so you would expect that it should likely take us a while to get up here to a new all-time high. The good thing is you don't have to wait for. Now, most people are going to wait for this before they buy in, and they're going to miss all this activity, right? Because they're scared. They're scared down here. They'll be scared as it rallies up. They'll have everybody, all the very, very bearish online telling them, oh, it's a bear market rally. Oh, it's a bear market rally. Oh, it's a bear market, right? And the problem with that thought process is it doesn't allow you to make money, right? It keeps you from making money. Now, generally, you want to trade, especially the newer you are, you want to spend more time trading in the direction of the overall trend, right? But the other way to look at that is, let's say you're trading the 15-minute, you should be interested in what your 1 hour trend is. If you're trading the hourly, you should be interested in what your 4 hour trend is. Go up one time frame. If you're trading the 4 hour, you should be interested in what the daily trend is. And if you do that, that allows you to get in before the overall trend changes. And that's important because the faster money makes more profits, right? The last thing you want to do is wait until, is not buying in anything down here and wait till you're way up here at 40 or 50 or 60,000 or 70,000 before you get in. You can do that, and that's fine, and you'll make a little bit of money. But if you are a trader, then you're looking for opportunity. And opportunity doesn't come when you're sitting around in your rear end, right? Now remember, this is coming from a guy, me, who is very risk adverse. But risk management limits it, right? And so I don't just enter ever just because there's a chance. I always look for a higher confidence entry, right? One that makes some sense. One that's more than just a reason other than, again, than, there's a chance, right? So what does this mean? Well, so here we go. We think there may be a triangle going on here. And if there is a triangle going on here, it'll be a wave B or wave X or a wave 4, right? But in any case, what it means is you've got one more move lower before price at least has some sort of bounce, right? And not just a little bounce, decent bounce. Because a triangle is the next to the last move, okay? It sets up the final move. Now, here's the thing. Now, right now, it could be this is A, B, C, D, E, and wave 4 is done, and we're going down, right? My problem with that is this is just 3 waves down here. Now, maybe you can get any diagonal here and go like A, B, C is 1, 2, and go A, B, C is 3, back up here is 4, and then A, B, C is 5, where it just breaks down, maybe doesn't even get down here. That's always a possibility. But ultimately, where it is right now, we're looking for a breakdown below this swing low here at 15,790 and 25 cents to indicate that the triangle is likely complete. If instead we break out above this swing high up here at 18,140 and 62 cents, that's going to invalidate this triangle. Now, the other possibility is maybe this is A, And this is A, B, C, D, E as a triangle, right? And then you'll have wave C breaking out a little bit higher here. Maybe even up to the R1 pivot on the daily. And then that's wave 4, and then we'll get a breakdown for wave 5. I mean, so all these things are still possible until we're breaking out above this 22,800. Same level we've been watching, guys. Same level we've been watching. So, I mean, this is where we're at. You kind of start local and you go, okay, well, maybe we've got this triangle going on here. If here, where is it validated? Where is it invalidated? So we've given you that, right? Whether the triangle ends here or wave E is printing a triangle and it ends over here. That's kind of what we're looking at, right? But if you're breaking out impulsively above the daily pivot, I think that's a pretty big clue that maybe we're done here. This isn't even 3. Maybe this is 5 and done here. And so what you're looking for is you're looking for a breakout above this swing high here at 18,140.62. Impulsive breakout above the daily pivot, which should carry it above this descending resistance, right? A breakout above 22.8. And then followed by a breakout above 25,214.57. This is all on Coinbase. Those are your steps that you're looking to take to become more and more bullish. Okay? There's absolutely nothing happening at the moment here that says you need to be all out bullish or all out bearish. Your degrees of bullishness or degrees of bearishness. Which is why I'm not really a big fan of using the language, right? Using the terms bullish and bearish, because people assume they have to be 100% completely that way. People think they have to be either bullish or bearish. And the problem is, most of the time, if you're trading like that, you're going to lose money. All right? Let me see here. Phil Swanee says he has a longer-term Elliott wave with this being a 4th wave and cannot exceed wave 1 around 13-ish. Yeah. Yeah, again, my target here is based on the height of this being a wave 4 and the height of this being a wave 4 here. And they find that confluence right at that, 14,000, 14,100 area. It could definitely go lower. Guys, when you're doing Elliott wave, of course, there is no thing that says wave 5 has to be a certain length, unless wave 1 is larger than wave 3, in which case wave 5 has to be smaller than wave 3, right? But, you always need that target. Where do you look first? And so for me, that's where it is. And like I said, I find it kind of interesting that not only does it have confluence with the S1 hourly pivot area, but also that support going on here off that point way up there, right? Not saying that this is necessarily a wedge coming down here, but just that the resistance and the support are coming together like a wedge. And so either that leads to a big breakdown below the support, or it leads to consolidation that breaks out well and strongly above the resistance. Yeah. Deadly123, what's up, man? Good to see you. Eric Quinn says the volume on that drop towards 15,000 mimics that of post-capitulation volume strikes. Yeah. So this is the other thing. Obviously here on, things are going to be different depending where you are, right? As far as volume goes, right? We can see that here on Coinbase, which is this is where it's really interesting here on Coinbase, okay? So if you look at this drop over here, right? This one right here, and we look up here, this will tell us the size of the candle spread, the candle body there, right? And so with this spike of volume here, $4,094, okay? With this one right here, $2,658. A lot more volume here though, right? So you have this smaller volume on this big drop, significantly more volume on a much, much smaller drop. So again, when I look at that, again, significantly more effort, much less result. That usually has me thinking, well, it looks like those who would normally sell have basically sold. Bottoms don't form because price gets to a certain price level that somebody thinks it needs to get to. Bottoms form because sellers run out of ammunition. Okay? Think about what I just said there. Bottoms form because sellers have run out of ammunition, enough ammunition to push it down below the buyers. Okay? So, whether the bottom is here or even dips to here, right? The reality of it is this whole area could quite possibly be a bottoming process going on. Okay? If this is the low, or if we were to get down here, that would just be an event. Lowest price is always just an event. But the process started back over in here, right? You had all this sideways for 6 months, basically, 5 months. And then you get this drop. And again, this was big news, right? This was huge news. And so I say, okay, so volume, I'm saying that it's possible that those who would have sold have done so, right? The other side of that, you can say and or, is that buyers are serious in this area, right? And so now we look at this and we go, okay, well, this is significantly more volume. So you've got a lot of selling going in. It's just not going anywhere. So what that means is sellers are selling here. They are selling here on Coinbase, right? But the buyers are much stronger in this area. And they're just soaking all that up. They're soaking up all this selling here. And so, again, bottoms form when demand outplays supply, basically, right? So we'll see what happens with this. But for me, this was worth watching. And this continues to be, especially so now, worth watching in this area. We want to see what's going on with this because here's the thing, guys. Like I said, potentially this is the bottom here, right? And if this is the bottom, this just basically becomes a spring below this range, right? But with that heavy volume, when you have a very heavy volume spring compared to the beginning of the range there, right? The selling climax area, you have to get a secondary test, a test of that spring. And what you expect is a higher low on much less volume. Because what this tells you is you had a huge bit of selling going in here, right? And it got stopped. Get your automatic rally kind of thing back up, right? It comes back, and your selling is nowhere near as strong as what it was here. It falls off, right? So I think there's that, I wouldn't be surprised to see price rallying back up here. And so that's what we're watching to see here. Again, do we break out above that swing high, or do we break down below this swing low? Because if we break down below this swing low here around that S3 pivot on the daily, I think you're all but guaranteed it's going down below the swing low. Let me see here. Poison says if we break and get a new low under 17,600, our last low, with this big volume, it means the bears have the market under control. Again, I'm not a big fan of using those terms, bearish and bullish and bears and bulls. I don't know that it means it has them under control. I think it just means, well, okay, so we drop to the next area of support, right? And we'll see what happens there. Yeah. Kimasabi, what's up? He says, is it possible that Bitcoin is currently in a weekly Wyckoff spring, but inside the weekly spring we get a 4-hour spring, a spring within a spring, if you will? Yeah, so this was the other thing, we were talking about here was, possibly, a spring or a terminal shakeout is what you could potentially see this at as well, right? So then it becomes very important what happens here now. Again, do we hold this low, and then do we hold this low as just a test of this low? Again, the volume much less than what we had here, right? So as long as this holds, it leaves open the possibility that this was, a spring or a terminal shakeout This was a secondary test of that low there. And it doesn't mean it can't test more along the way. And as a matter of fact, with the amount of volume that came in there, it very well might. But, right now, you want to say, how does this play out, right? So what I don't like about the volume profile here in that case is you've got a lot of volume coming in here, right? So you rally up off the top here, you get to the top of this range here, and these two is where you get that volume. But it draws back in, and you get a lot of volume here catching at the low there. So that's good. You want to see that. You get volume here on the breakout above that 15-minute. And then over here at the top, where you're getting near the top here. So overall, volume's dropping off. Again, volume, price action, consolidation. It seems to want to be a triangle. But I am open to that possibility that we break out higher here and we get above this, in which case, again, I would look at potentially this being the bottom, this being the test of that low down there, higher low, much less volume. And then we'd look for that rally up out because, we're looking for that break back out into this range here. So, yeah. But, right now, again, structurally, it does look like we've got a triangle forming in here. So we definitely want to be aware of that. And that breakdown through that swing low there then says, okay, well, this isn't a good test of this low here because you're breaking down below it again instead of rallying back up above the reactionary swing high. Okay? So again, we get in here, break down below 15,790.25 or break out above 18,140.62. That's what I'm looking at right now. And if we're going to break out here, I want to see a nice impulsive breakout above this. This is the hourly pivot, and that's a swing high right above it. So that's where I'm kind of looking at it right now. Let me see here. Let's jump in over here real quick. We've got, we've been talking about the likelihood that maybe CPI has kind of topped out, and that, looking to potentially drop instead of a 75 basis point rate hike that we've had all summer long into, just last month, that maybe they're going to drop it to 50%. This was about 84% the other day. We're down to about 75.8%. But the market still overwhelmingly believes right now that we're going to get a 50-point rate hike versus a 75-point rate hike. We'll see how things continue to play out over the next few weeks as we get there. But right now, the market seems to be pretty much on side. And so a lot of it has to do with, those recent numbers coming out from the government and being a lot less than what was expected in terms of inflation and whatnot and production. So there is a lot of support for the idea that we're going to get 50 on the next one. So we'll see how these numbers continue to play out here coming up. I'll be especially interested in the jobs number next month. And the month-over-month average hours and payment, right? How much people are getting paid. I want to see, are those things going down or are they going up? I think if one and or both of them are going down, I think that gives the Fed a lot of ammunition to slow it down to 50 basis point hike. Now remember, 50 doesn't mean they're stopping, guys. They're still raising it, but they're slowing down. They're decelerating, just like inflation seems to be doing at the moment. And you go, okay, well, if they're still raising it, why would things still go up? Because again, the idea being that the worst of the worst is over in terms of Fed rate hikes, and they're starting to slow down. And that's why you get the positive reactions out of the markets when that happens. Does this bottom process mean we're soon to start wave 1 of 5 of a new cycle, or is this simply a wave 4 downtrend and wave 5 still to come within the same cycle that we started back in 2018? What's 25 basis points a month, friends? So yeah, that's where it's all about interpretation of what's going on here. So let me kind of zoom out a bit. The idea is ultimately this is 3 and this is 4. and this may be 5. Okay. But if it ended here with the, the 1, 2, 3, 4, 5, the ending diagonal here, this, I see this as likely the orthodox top of this rally, which means this would then be, again, a flat correction, right? Because you have A down, B breaks out to a new high, and then you have 5 down for C. Now, the decline itself off this point here, off the low here, is almost 50%. If this is to be some sort of really large wave 4, which, I mean, you basically you'd be looking at 1, 2, 3, 4, right? And so if that's the case, you want it to stay above this 13,868 and 44 cents, because breaking into that, we have overlap of wave 4 and wave 1, right? But if we were to look at that, then where we're at right now with the decline is right around the 50% retracement. Now, usually for wave 4, we look for a 38.2 as our initial target, right? But we get a secondary target at 50%. So, yeah, it's possible. This is that other possibility that this could be 1, 2, 3, flat as a 4, 5 going up. Now, if that's the case, and let's say the bottom's in right here, you're looking up here at around 156,700 as your wave 5 target. If it drops down a little bit further, well, it's a little bit less than that. But here's the thing. If this is just 1 and then a flat as a 2, maybe, right? Again, the idea is you're getting close to that 50% retracement, still a solid wave 2. And all of a sudden, things change a lot more. You have much further upside, right? Now, with this, obviously, with just regular extensions here, I think you'd be looking upwards of 3618, 4618, maybe even 2618, at least for wave 3. I think wave 3 would extend beyond the 1618 because it always does, right? Always does previously. So we'll see how it plays out. There's a couple, obviously a couple different possibilities on that. And nobody knows for sure what it is. I can come up with counts that give us 5 waves up here. So this could be 4, this could be 5, and we're done with 5 waves up from the beginning, which means we're looking, if this is wave 4, that means this should be your initial target, right? Everything else aside, guys, in Elliott wave 4 of the lesser degree, if this is one wave all the way up, right? This is 3, this is 4, this is 5 up here, right? Our initial wave 2 target is always wave 4. That's a long way down, right? Now, generally we say it's wave 4, right? Whoops. So the whole totality of wave 4. But most of the time, it comes all the way down to that wave 4 support area. I've had people ask, maybe is it A, B, C, D, E as a triangle? I mean, I don't know that I can find a count that says it's definitely not. You do have consolidation in here. And, if that's the case, well, then a breakdown below, if you think this is A, B, C, D, E, then a breakdown below the swing low here at $9,813, if you were to break down below that, it would say that this is 5 waves up from the bottom. That's it. If you're to get a rally up off there, then, things become even more interesting, right? We start looking even more, right? If this is 4 and this is just 1, 2 of 5, I mean, all of a sudden, let me see if I can turn this back around. We've pulled back then 70.5%. Institutional pullback level, right? 78.6 is right there around 14.819. So, I mean, if this is going to be a triangle, right? Well, then you got a 1 and maybe A, B, C is 2. And then you're potentially looking up much higher. It's heading up here, right? So there are a couple of different ways to count this depending on how you do. So what do we do when it comes to that? Well, when it comes to that, then we just look at, okay, well, where are these generic levels? Where are these levels we generally expect price to pull back if it is this or if it's that? And that's what we're working with right now. Again, looking at it locally, this breakdown suggests maybe this is, again, A, B, and then 1, 2, 3, 4, 5, right? So if this is 4, then again, as I showed you, the normal expected target for wave 5 finds confluence with the idea that locally here is wave 5 of 5, and wave 4 of 5 in a triangle, and its wave 5 of 5 has that same area confluence for the target. So that's what we're kind of looking at there. Anaval, good to see you. Worst case scenario? Yeah, 0. I mean, that's always worst case scenario. I don't think that's going to happen, but, there are no guarantees in trading, guys. And so I just think it's important right now, though, everybody's very, very pessimistic. Everybody's very much, it's got to definitely go down to these insane low numbers. And it may, but I think if you just kind of sit yourself to that and say that's the only possibility, I think you miss out on a lot of opportunity. So I think the important thing is to keep your eyes open right now and pay attention to what's going on. Watch that price action in volume development. Watch to see, do we take out these important levels here as we're heading up? Because the more we do, the stronger the likelihood that the low is in. But that doesn't mean that we hit all-time highs overnight or even next year. I think even if this were to be the low, or we were to come down to that S1 pivot on the hourly, 14,000, 14,100, I don't think, I really don't see a really good scenario in which we come out with an all-time high next year. I think we're a couple of years off from that. But there's so much money to be made in that process getting there. And I think that's where most traders miss, because they don't know what they're doing and they get in the markets and then they listen to all, the big names that are very euphoric at the top, very bearish at the bottom, right? And then they become paralyzed. They become fearful. You can get rid of a lot of that paralysis with understanding proper risk management. It'll allow you to potentially get into trades better there, right? So let me kind of get over here to these other things real quick here, guys. Let me see here. So the DXY, let's pull it from here. So this again with the DXY is the futures, which are traded on the ICE exchange. From 85 or so here to the swing highs in 01 and 02 to here. I mean, this is the monthly. These are monthly candles. This looks like a pretty clear rejection at this resistance here. It broke out, and you've got lower highs the following 2 months. Matter of fact, you broke out here, left a bit of a wick, did a little doji inside bar here almost, right? And now you've got this huge move to the downside. Now, the month still has another 12 days in it, right? So anything can happen. But if you're seeing something like this, it seems to suggest this is probably a top. Again, those of you that have been following me, you know that when we were down here and I said this is likely the bottom, this area right here is where I was calling the top, right? Again, right into this area in here, right? The supply. So, while this... Now, if we do happen to break out from where we're already at our low here, That gives us a target of about 121. So that'll give us a target up here. But for now, until that happens, I think we're topped out. And if we look here, it's kind of iffy on the counter here, but it looks like we've got some sort of leading diagonal here, potentially 1, 2, and then now we're working on maybe maybe like a 1, 2, or a 1 with a flat as a 2. Looking for potentially a breakout above this 107.274 area that kind of takes us up toward this, this hourly pivot right there at the EQ of this green, what's become a supply structure here, about 107.98. I could see us potentially rallying into that. But a breakdown below 105.859 should have us heading back lower then. On the daily, we're kind of bouncing off here. Find a resistance to that S2 pivot. But, again, nothing really whole lot of positive going on there. Again, the idea that we've got like an ABC is 1, 2, ABC is 3, 4. And then, I had an ABC 5 here, but this could be ABC here, right? And then A, B, and C on the rally up here. And then, so that becomes 1, 2, and then 3 down. So I'm kind of open on interpretation at the moment. But ultimately, as long as we're below that daily pivot, your bias overall should continue to be to the downside. If we do break out above this kind of area here, then it looks like we might jump out above the swing high, and then we're looking at 121. So yeah. Fibbo, for sure, man, for sure. Share it with me. So yeah, again, if you look at the Great British Pound cable, you had that basically looks like a capitulatory drop there when it broke down and the pensions almost got wiped out, right? And right around that same time, you had the Bank of Japan intervening, right, to the tune of billions of dollars to defend that 150 area. And all that happened, again, right there, with the dollar finding that top there. So when you got to remember the DXY itself is just a weighted average of, the Euro USD, the USD Yen, USD CAD, Cable USD, USD Swissy, and in those. So, but when you see the USD Yen there having such strong intervention there, and they are, they're the second largest contributor to the weighted average, right? Almost 12%. Behind the Euro USD, which is about 58%. And then you look at the Cable USD. Oh, sorry about that. I knew it was coming at some point. And the Cable USD, which is just a bit less than the USD Yen, and you start seeing those big hits coming in there with those banks kind of defending. And that's after the dollar's rallied for almost 2 years. So the idea that it tops in isn't so crazy. But, I've shown you guys the articles and the links where it says all these money managers and people and whatever are now they're in, right? Over the last 2 months, now they're in. Well, oh my God. They're getting in at unknown levels, at these huge levels, right? In the top area. And so you might remember that at the top here, we talked about the DSI at around a 92 or 93% bullish, right? Very, very offsides. It's the opposite of what I talked about in January 5th of 2001 when we bottomed. And I mentioned that the DSI was about the same, about the 92% bearish. And I discussed the what that usually means. The market doesn't like to be off sides that significantly for any real length of time. It usually reverts back, right? And that's where you get those major reversals. So again, it looks like we're probably topped out there and we're heading lower. And so that's important because if the dollar's heading lower, then it takes downside pressure off prices of other assets, denominated in dollars, of course. All right. So that's kind of where we're at with that. Let me see here. Try not to cough again. Jeez, hit the wrong one there. I'm so sorry, guys. I'll probably have to call this soon here. These coughs are really starting to come in. What I have here, so we've got this big rally that we've been watching off the October low here. And so I'm looking at trying to count this out, and it looks like maybe one, right? But here's the thing. ABC down, 1, 2, 3, 4, 5. Maybe ABC forming here, right? So the fact that we're only 3 down is concerning as far as the count goes, right? If we break out above this swing high, we're going to look here initially at 34, 455, and 60 cents. Not 60 cents. 34, 455.6. Okay, on the Dow. That's where we'd be looking. That's where I'm going to be looking. It is possible maybe this is 1 and this is A, B, and this is C as a flat. So what we need to see though is a breakdown below this swing low. If we can get that, then that'll keep this wave 2 target down here at the daily pivot alive. So that's how I'm kind of watching that. If we're looking at the E-minis, let's see. Right here. So it's the S&P, right? Again, you got a rally up off the pivot. Now this rally looks like 3 waves up. But it's kind of questionable. We got this little dip right here. Let me see here. Swing low over here, 39.60, 39.62. Yeah, I mean, so you have a 1, and this is a second wave down. So, it's like, what's going on here? So the best thing you do is you go, okay, well, do you get a breakout above the swing high, or do you get a breakdown below the swing low here? If you get a breakdown below the swing low, we're going to continue looking down here, again, toward the daily pivot for that wave 2. I've got it as quite possibly a leading diagonal here. ABC 1, 2, ABC 3, 4, ABC 5. So we can get a WXY or an ABC kind of thing going on, taking us down here. And this would make sense with the idea that the DXY is going to continue up a bit higher. Remember we looked on the DXY and we're looking at potentially heading up to that pivot. So if it's going to do that, then you would expect the downward price pressure on stocks, and we would expect this kind of pullback. So I think that's probably more likely than not to continue kind of coming back with that. Christopher, I appreciate it, man. Yeah, I'm coughing really bad. It is what it is. I've got these these things I've been eating like candy here. Still kind of kills you every once in a while, right? Again, looking for a breakdown toward the daily pivot here. This is the NASDAQ Composite Index. And so like the others, we got a bounce here at the pivot. And now we're looking for a breakdown below that swing low to kind of keep that daily pivot target open. Now, with this one, we do have a heck of a gap here. This Thursday, was it the 10th of November gap? So, I think it's possible that we could see a pullback all the way down here toward 10,350. But for now, we're going to look and see if we don't just get a pullback. We're looking for a breakdown here at the pivot, on the hourly pivot, to pull us on down here to the daily pivot. This is the 4-hour here. Here's the daily. But for all of them, remember what we need. This is just potential rally up, potential bullish rally off the lows, right? For all of them, don't forget this kind of this mid-August swing high that we have on all of them. We have to get above that. If we can get above that, then it looks like, possibly an A, B, C, a short C on all of them, right? Until we get above there, though, it's still very much possible that we could be, in this case, 1, 2, and working on wave 3 lower. So don't let the count there kind of fool you. We still need to see that breakout really above that mid-August swing high to really start thinking really bullishly. Until then, it's still very possible that it could just be a counter trend rally within that larger wave 3 before, we kind of resume that move down. So, again, guys, it's just about being careful when you're out there trading. There's so much, guys, listen. If you listen to most of the people out there, they're like, oh, no, overall we're going down, so don't be trading, right? But the problem is you miss all these opportunities to trade along the way. So, you have to find out, are you a trader? And if you're a trader, what kind of trader are you? Are you a multi-week, multi-month kind of really long-term swing trader? Or are you more of a day trader? If you're more of a day trader, there's no reason you shouldn't be trading this kind of stuff on those smaller time frames, right? Because off this swing low down here, off this just over a month ago, October low, the trend is up. High, low, higher, high. That's an uptrend off that swing low there, right? A lot of opportunity to trade along the way. But as I would always say, don't jump into a trade just because there's a chance. Look for some confluence of factors that makes it more likely than not that it's that it's going to do what you think it may do. It means you will trade less, but it also means that you're more likely to get into a correct trade. So even though you'll trade less, it means you're going to lose generally less money because you'll be trading less, right? If you're using proper risk management. And additionally, you'll be potentially making more money. So you get a double whammy there, right? On the good side. So that's kind of where we're at with that. If we look at silver, so silver, I'm looking at the possibility. Now, silver, what we've talked about previously is that we've got all this crazy side stuff going on here. And if the count is correct, if we're still bearish heading down, the idea is that we're printing a flat correction, an expanded flat correction for wave 2, right? Within that, it's a possibility that we've got wave 4 here, and we'd still have wave 5 coming up here, maybe to 23.62 or even 24.30. But, I've been talking about the idea that I'm looking for silver to head down there below 10. I am open to the possibility that it won't. That maybe this is a low and we might be heading up to a new high. I am open to that possibility, especially with what's going on here. There's this craziness going on here. And then looking at what's going on with the dollar. If the dollar's topped, well, there's less of a reason to think that silver is going to continue pushing lower, right? I mean, it still could, very much so. And I haven't completely given up on the idea it may go down or lower, but I am watching what's going on here. Right now, we had this nice bullish move here, nice impulsive move off that daily pivot. Took us above the R1, almost into the R2, right in this previous area of support or resistance. We're pulling back to the previous area of resistance as support. So when we break out here, all of a sudden things start looking a bit more rosy for silver. Now, we'll contrast that to gold. Silver went bearish for you? You like the count though? Yeah, I've been bearish on silver for a very long time. Made me a lot of money coming off, the high. Same thing with gold, right? So gold, I've got this possible, again, coming off the top here, the idea that we've got a 1-2 right here, right? Slightly lower low. And then coming off that, we've got a 1-2, 1, maybe with a flat here, and a 2, right? Now I think. Now see the other thing you could look at here is go, well, okay, maybe it's ABC is 1, 2, ABC is 3, 4, ABC is 5, right? And get this as a leading diagonal here. But I don't like that because we've got a 1, 2, 1, 2 already here. So this would be 1 of 3 as a leading diagonal. And I'm not a big fan of that particular structure, that particular count. So now we just want to see what happens. We rallied up just around the 78.6 here. I mean, it popped up a little bit higher. Really, you can look here, right there at the EQ of my range here, right, that I've had, well, since back here in June, right, of 21. But that's where we hit. So now we're watching, if this count is correct, well, then we've got a minimum expected wave 3 target here of 1462.50. And until this is disproven at the moment, this is still the primary count. This is still what we're looking at. But if we were to break out above wave parentheses 2 here at 1824 and 60 cents, well, that invalidates the count, right? Then all of a sudden we got to figure, okay, well, what's maybe going on here? And with that, increases the odds that maybe this is A, B, and C here as a flat correction. We're heading up. So again, the part of being a trader is not being married to something, damn whatever happens. It's about being open to understanding what the possibilities are so that you can lock in profits and you can get into new trades. Now, obviously what I'm saying is completely opposite of what you find all over crypto Twitter and other social media, but that, that should tell you something. It tells you that most of the people out there aren't really traders or don't really have a lot of experience trading. They looked really good when prices were going up, but their inability to think beyond the simple things that they used to do that, make it a lot more difficult when price is correcting, right, or potentially reversing. So this is all we're looking at, and we'll see how it plays out. Again, still looking for that lower, but if we do break out above this point, well, then I have to come back in here and look at this and go, okay, well, what's maybe going on here now? Is this, is this the issue? Is this maybe a leading diagonal, with a 1 here or something, and then a flat as a 2 heading back up or something? They're the things we have to keep in mind. But nonetheless, as traders, you find your entries, you get your targets, you lock in profits consistently. Don't worry about swinging for the fences every time. I'll tell you right now, guys, if you're listening, if I haven't put you to sleep yet, one of the best things you can do as a trader, trade for income. Learn to trade for income. Stop trying to swing for the fences every time. Just look to make some profit. Because what you'll find is it's a lot easier to lock in a little bit of profit than it is to find the big home runs, especially when prices, for instance, going sideways. And by locking in profit consistently, time and compounding take care of the rest of it, and you'll notice that your account will grow a lot faster than if you're always swinging at the fences. Does that make sense? So, there you go. Let me jump back over here to Bitcoin real quick. Yeah, again, getting the pull off here. Again, I've been talking to Discord about this. I can get 5, I can get 3. There's different ways to count this. This definitely is 3 back here, or appears to be 3 back here, right? And then the question is what's going on here, and it just looks like 3, 3, 3, 3, 3. You know, so it looks like it's consolidation in the form of a triangle. So I am looking for the likely breakdown below that swing low to carry it at least down to this hourly S1 pivot. But again, breaking out impulsively above that hourly pivot, carrying it above this swing high up here at 18,140 and 62 cents, is going to tell me that this is not a triangle. It looked like one, but it was a series of maybe 1-2s, 1-2s, 1, 2, 1, 2, and then 1, 2, kind of heading up, right? And if that's the case, if you've got a series of nested 1-2s, then usually you're going to get a nice big explosive breakout higher. All right, guys. Yeah, FX, man, guys. I continue to tell you, I'm not a crypto guy. I'm a trader. I have a lot of money in crypto, but I'm not a crypto guy, right? I'm not a crypto maxi. I'm not a Bitcoin maxi, anything like that. I see it as another tradable asset. If it turns out and works out really great and things go on great, fantastic. But in the meantime, my goal is to make money with it. For me, my market of choice is FX. It's Forex. I don't know if it's just because I like money, but that is definitely my market that I enjoy more than anything else. All right, guys. Hey, listen, I'm going to get out of here. I really appreciate you guys showing up. I apologize for the coughing and everything. We'll try and do this again next Tuesday, 11 a.m. Central Standard Time. Don't forget, next Friday, so we're closing the office there half a day on next Wednesday through the weekend, right? Because it's Thanksgiving here in the U.S. I may do a stream on Friday. I don't know yet. So guys, be following our social media there or Discord with us. And I'll let you know for sure. I haven't made a decision yet, but we'll definitely have the office closed half a day next Wednesday through the weekend. Just to, again, celebrate Thanksgiving and all with family, friends, and all that. So hopefully get this COVID thing gone and out by then so that I can do that. Don't forget, guys, we do have this special going on. It's going to be applied to your checkout page automatically. If you get in there and you're not seeing 50% off of anything, of any of the tiers that we do, 1, 2, 3, and any of the time periods in there, just shoot me a note and let me know, and we'll help you get that fixed out. And like I said, I'll be releasing information about the coaching coming up here sometime. I hope to this weekend, but it may be next week before I do. But if you do happen to take us up on this pre-Black Friday special we're doing, 50% off thing there, then and then you decide maybe you want to join in with the coaching, we will apply, your purchase, what you pay for that purchase to that. So you'll be all set to go. By the way, part of that coaching is going to be a year of Tier 3 access as well in there. All right. So just kind of want to let you guys know about that. Follow me there, guys. TX West Capital there on Twitter, and don't be afraid to comment on stuff that I post. I'm not going to jump down your throat or whatever if you feel differently about something than I do. As I always say, I'd rather be right, or I'd rather be profitable than right. The only way we can really find truth is by speaking out and arguing, right? And I don't mean really arguing, fighting, but I just mean giving our reasons for what we think, and then listening to the other side. And maybe that other person, guys, I've been doing this a long time, doesn't mean I know everything. And you may have only been doing it a short time, but you may see something a little bit differently than the way I see it. And when you explain it to me, it may make a lot of sense to me. I would advise you that's anytime you're talking to somebody out there with anything, trading or anything else, that's the kind of person you're looking to talk to, because otherwise, be worried if somebody's like, this is the way it is, period, in a sense, that's all there is to it. Doesn't mean I'll necessarily agree with you, but I'm always willing to listen, always willing to hear a different side to something, because it very well could be something that I didn't think about or seen in a way that I didn't necessarily see it. All right, guys? All right, I really appreciate you guys showing up as always. Just remember, the only thing you control in the market is how much you lose. That's it. Risk management remains paramount. It is the number one most important thing you'll ever do as a trader, day in and day out. Okay, guys? Please, if you get nothing else from me, get that. Because as long as you really understand that and you work on that, you've got a chance of being a successful trader. If you don't, unfortunately, the odds are very, very, very much against you. Okay? All right, guys. Y'all take care. You have a great weekend. And, man, say hi on Twitter, all right? Take care.